Hello everyone. In the last pre-market video, we discussed two things. One, PCE inflation was higher. Two, FII increased the short position in the future index market despite market being close to positive on Wednesday. That played its hand on yesterday monthly expiry and made the Nifty to down by near 350 points. So let's discuss those in detail because lot of those short position rolled over to December month, and if it happens again, we can be ready. First of all, for the big FII or proprietary traders, Nifty can be manipulated in two ways, either through banking stocks or through IT stocks. Yesterday it appears they used IT stocks. Why? Because of US PCE inflation. For October month, it increased compared to September month. Though Fed chairman mentioned it's expected, now there is an additional Trump tariff problem, which expects to work against the December month rate cut. So there was a huge pressure in the IT stocks yesterday. So Nifty IT whole index down over 2%. Then second, derivative market manipulation. For understanding purpose, I'm going to show the Wednesday and Tuesday end index future open interest data. If required, please pause and have a look. In the last video, I said FII increased their short position, but one of the viewers commented that FII short position haven't increased that much. Rather, proprietary traders decreased their short position from 61% to 57% kind of. Then asked me why I'm not mentioning that. To answer that, as I said in my multiple videos, FII always play in the index future. For that, they use option derivative market as a hedge or to manipulate. Whereas proprietary traders do opposite. They use option market as their primary money making strategy. In contrary, index future as a hedge. So here the top section is just a percentage split. Like for example, let's assume I am the proprietary trader. I have 10 contract open interest. In the split, as per the present position, 6 on the short side and 4 on the long side. In this case, with this 10 number, I can't able to manipulate. I need larger quantity. That's the reason I give more importance to FII in the future index rather than the proprietary traders. So for understanding that who got strength, please look at the lower section. That is where the contract count is. 65% FII short position increased the contract count from 36% to 39% number from the total open interest. On the other hand, 57% proprietary trader short position contract count improvement results only in 12% to 11%. Hence, in the future market, FII got more control and proprietary traders on Wednesday end has negligible influence. So only in the last video, I didn't mention about proprietary traders. Then in addition, if you see the derivative trade value, on Tuesday and Wednesday, FII sold crazy amount in the option market. That in the last video we discussed this, that FII sold massive put option, which yesterday they squared off for 66,000 crore rupees, which in turn crashed the Nifty index. So I know it's a lot. Let me summarize the takeaway for December month. Yesterday's monthly expiry closed and decreased 4% open interest on the index future. The rest rolled over to December month. And even now, FII holds 67% short position, and in the total holding, they hold 32% number of contract in the total open interest on the short position. Hence, for the December month also, they want the market to go down. Will it happen? Let's see. For November month expiry, the starting Nifty value was around 24,300 to 24,350. So it seems like FII managed to hold the Nifty not to exceed that range, and also market expired very much in favor of them. If it repeats, then the December month expiry close expects to expire below 23,900. Please don't make trade based on this. I'm just highlighting the trend I'm saying, and it's really interesting if it happens for educational purpose. And in addition, also we need to keep an eye out on option market. If FII sold heavy option like for 40,000 crore rupees and 60,000 crore rupees, either call option or the put option, then on the following day, most probably on the expiry day, they will square off that position. Hope everyone able to follow me. So yesterday Indian market fall was just because of derivative market monthly expiry. Other than that, nothing. In fact, whole global momentum is good. Most of the European market closed positive. And even on our Indian market, if we see the advanced liquidity ratio, 59% number of listed stocks increased compared to 38% decreased, hence actually more number of stocks increased. So now the question is, what's next? This is just my opinion, I can be wrong. Generally for today, we can expect some level of short covering, but none of the data is signaling that. If Nifty recovered and moved above 24,150 means probably FIA might reduce their short position and might turn positive. But if Nifty closed below 24,000 mark means, then I'm expecting even for whole December month consolidation to continue. Then regarding GIFT Nifty, early morning today, December month expiry closed at 24,149. Equating that with the spot market, it's indicating the gap up opening of 20 to 30 points. And if we consider 150 points premium instead of 200 points, which it was at the time of yesterday's closing, then it's indicating gap up opening of 100 points, which is good. But the alarming thing is, yesterday no index rebalancing and the trade volume was slightly above average. Despite that, in the cash market, FIA net sold for massive around 11,750 crore rupees, more than the fund inflow from the MSCI index rebalancing. I think this may be calendar year profit booking. However, by buying for 8,720 crore rupees, DIA supported the market. If not DIA money power, yesterday it would be catastrophic. Just for info, last night no US market. As a summary, US future market at present it's trading flat to positive. European market closed positive. Hence, the global momentum looks good. In addition, GIFT Nifty indicating a positive opening, and our Indian government official mentioned that Finance Ministry considering to scrap the windfall tax completely on the domestic crude oil output. So all indicating good. However, this massive FIA sell-off on the cash market is alarming. Moving on, as per stock open interest, HDFC Life Insurance, SBI Life Insurance, Bajaj Finance, Axis Bank, Dr. Reddy's and Godrej Properties got an increased open interest along with a negative close, indicates the short build-up. On the other hand, long build-up list is small, only 3 stocks, GMR Infra, ICICI Prudential Life Insurance and Granules India got an increased open interest with a positive price close, indicating the long build-up. About the things to look out, early morning Japanese inflation was released and it came as 2.2% against expectation of 2%. So inflation increased, which is not good, and that got the potential to turn the global momentum negative. And in the afternoon, France GDP data, Germany retail sales data and Germany's unemployment rate are due. Then in the aftermarket hours, Europe's November month consumer inflation and India's bi-weekly bank deposit and credit growth rate are some of the items we need to keep an eye out today. Coming to technical, Nifty opened flat and decisively broke the 3-day consolidation range of 24,100 to 24,350 on the downside and fell below the psychological 24,000 mark with above average volume. Thus, on the daily chart, Nifty formed a long bearish candlestick pattern, and in addition, Nifty decisively closed not only below the 10 and 20-day exponential moving average and also below the middle line of the Bollinger Band, which is nothing but 20-day simple moving average. Furthermore, it also nearly filled the large bullish opening gap it created recently on November 25. Hence, as an overall, the sentiment looks weak and further weakness seems possible from here. In the short term, if Nifty falls below 23,870, it might continue declining towards 23,500. However, if it sustains above 23,870 and does not make a lower low, it could witness a sharp recovery. In case of Bank Nifty, it opened 90 points gap up and also corrected. However, it outperformed Nifty. Thus, on the daily chart, Bank Nifty formed a bearish candlestick pattern with an upper shadow, indicating pressure at higher level. And it could not sustain above the horizontal resistance trend line as well as failed to hold above the 50% Fibonacci retracement level. However, one positive thing, Bank Nifty is still trading within the upper band of the Bollinger Band and remained above all key moving averages. Hence, on the downside, support is at 51,500 and then 51,250 level, and on the upside, resistance is at 52,250 and then at 52,500. On the options front, the maximum call option openers was at 25,000 strike followed by 24,500 and 24,000 with maximum new call option writing at 24,500 strike and then 24,000 and 25,000. On the put side, the maximum open test was at 24,000 strike followed by 23,000 and 23,500 with maximum new put option writing at 24,500 strike and then 24,000 and 24,800. Thus, from options data, Nifty might remain in the range of 23,500 to 24,500 in the upcoming session. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.